For us, what really mattered was the PMIs, which came out last week, because that was really the first look that we've had at the impact of the re-escalation in trade tensions over the past couple of weeks. And what you saw, obviously, manufacturing remains under pressure. We know that this uncertainty has caused a bit of a slowdown in manufacturing and capex more broadly. What caught my attention was that the services side of things has begun to soften up as well. And up until this point, there's been this rhetoric that a healthy labor market and a dovish Fed and all of this is going to keep the ship afloat. I think what we need to be cognizant of is that if we do see further deterioration in the service side of things and we don't have resolution on trade, now the economy is coming under pressure. Now I think we start talking about the rising risk of a recession sometime in the next 12 months.
In the U.S.?
In the U.S., yes. I think that, again, when we look at what's going on, if we see full escalation in trade, to us, that could hit earnings fairly substantially, particularly 2020, where we're not seeing those estimates priced in. And if businesses pull back on hiring in addition to capex, that's in a consumption-based economy how you end up with a problem.
We just had UMich at a 15-year high.
Right.
We just got Conference Board at a 6-month high. I mean, how can we talk about recession in the same sentence as those things?
So I think, yes, the consumer looks pretty good right now, but is there a risk that if you see businesses fully retrench and the unemployment rate starts to move the other way, right, then I think that we're in a bit of a more precarious situation than we are at the current juncture.
Is risk being led by, or will it be led by, the consumer or the enterprise?
I think right now you're seeing the downside risk primarily come through the corporate side of things, but again, if you see that move away from just capex spending and into what companies are doing with their labor force, that's when potentially you have a big problem on your hands.
Jeff, we can all just speculate as to the president's next move and his strategy here, but how much economic and market pain do you think he's really willing to tolerate here in the name of this trade fight?
Well, obviously he's willing to absorb the 25%. I don't know if he's willing to absorb what's coming from China. China's strategy has changed considerably. Up until now, China has had a reactive strategy. Basically, he set up tariffs, they responded. But since May 5th, when he announced the increase in tariff, they've adopted a proactive strategy. They've taken out the playbook they've always used to retaliate against other countries, and they're starting to apply it here. And the moves include portraying China as a victim, expressing outrage that China is not getting the dignity that it should, getting the media to whip up nationalism, and then threats. And the next step, which is what we're going to see soon, is action. Action against American firms in China and perhaps American firms overseas. Things like boycotts, perhaps, or inspections, all kinds of ways to interfere with American business. So this is pain that the president has not seen before, and the Chinese can ratchet it up or down, depending on how things go.
All right, well, none of it seems to be going in a good direction if you hope for some sort of agreement. Would you agree with that assessment?
Yes. I think that we've also got a policy problem here. China has just changed its policy considerably. Over the weekend, while the president was in Japan, Xinhua, the authoritative state news service, basically said that the industrial policy issues of most concern to the United States are not negotiable. They called them core interests, which are the code word that China uses for things like Taiwan, which are among the most sensitive and important issues here. So things are going south. They're not getting better in the short term.
Okay, so let's assume they continue to. They get worse before they get better. And some of these issues seem to be intractable, and the U.S. doesn't back off. What is that going to mean, in your opinion, then, for global growth, for the Chinese economy and its ability to continue to grow?
Well, these are all going to be negative factors. These are all going to be things that are going to cause problems. And I think that both sides hope that the other is going to blink. But what needs to happen is that we need to have good diplomacy. We need to find a process where both sides can take gradual steps to de-escalate this situation and preserve face on both sides. If it comes down just to I win or you win, then this is going to go on indefinitely because neither side can withstand that kind of humiliation.